Hi, I'm Amy Ford, and in this video, I'm going to cover all the basics of how to prepare financial statements. This is a common learning objective of most introductory financial accounting courses. The best way to understand how to read and interpret financial statements begins with an understanding of how they are prepared. There are 4 basic financial statements. The first rule you need to know is that the financial statements must be prepared in order. That means the income statement must be the first statement prepared. Now, the reason for this order is that information from one statement is used on the following statement. The end result on the income statement is net income, and that's used in preparing the next statement, the statement of stockholders' equity. Now, this is sometimes just called the statement of changes in equity. If you were a sole proprietorship or partnership, the statement's title would be Statement of Owner's Equity. Now, whichever type of business, this statement is summarizing the results of what has occurred related to equity and the entity's ownership for the current period. The third financial statement is the balance sheet. The ending balance of the equity from the Statement of Stockholders' Equity is the balances reported on the balance sheet. The fourth and final financial statement is the statement of cash flows. To prepare this statement, you need the other 3 statements, along with some other data. The next basic rule for preparing financial statements is how to label your statements. The heading of each statement should consist of 3 lines. Now, I always tell my students to remember back to elementary school, when you're first learning how to turn in your homework assignments to your teacher. The first thing you always put on your paper is your name. The second line is the name of the statement. You simply are labeling what statement this report represents. Now, I think this is especially important for introductory accounting students as you're just becoming familiar with these 4 statements. Now, the third line is the tricky part. Something to do with the date. 3 of the statements follow the same dating methodology of for the period ended. So if you were presenting the financial statements for the most recent quarter that ended on September 30th, the date line would read for the quarter ended September 30th. Or if you were presenting the financial statements for the most recent year that ended on December 31st, the date line would read for the year ended December 31st. The balance sheet is different. The date on the balance sheet is simply the last day of the period. Using our previous examples, the date line on the balance sheet would simply say September 30th or December 31st. This is because the balance sheet represents the balances on this particular date, not the balances for the range of that entire period. Now, some people say the balance sheet is like a snapshot. If you took a picture of all the accounts, these are the balances on this date. Now, let's go over these financial statements in more detail. We'll start with the first statement, the income statement. This statement summarizes the revenues and expenses for the period. How well did we perform in terms of profitability for the recent period? That is the question that's answered using the income statement. The income statement measures our financial performance of profitability. When comparing revenues and expenses, we of course hope that revenues are more than our expenses. Revenues less expenses is referred to as net income. Now, this is a phrase where outside of accounting, you may thought of calling it something else, but our accounting term for the difference between revenues and expenses is net income. If revenues are less than expenses, that's not good. Now, in this situation, we call the difference the net loss. The company's losing money if expenses are more than the revenues. Now, if we could stop here, this income statement would be pretty easy. This simple revenues less expenses format is referred to as the single step income statement. But alas, we are not done. To better provide information to the users, which is the entire purpose of these financial statements, we will present the income statement in a certain format, which groups the results into multiple levels of income. Now, we're going to go through this process together. Is what we've covered so far helping you understand financial statements? I hope so. If you want to learn more about how to prepare the income statement, statement of stockholders' equity, and balance sheet, then click the link below or go to gleim.com and look for our free basic accounting course in the CPA free resources section. In the course, you'll find great information on other topics, such as all the details on how to record inventory and receivables, which can really help you in your financial accounting classes. So click below or go to gleim.com to learn more.